welcome back, and thanks for tuning in to another episode of the Landtech Link podcast. Today we're going to discuss some financing options that are available for manufacturers looking to expand their operations, whether it be through equipment purchases or software purchases. So this is very beneficial for manufacturers to keep that initial investment a little bit lower while creating monthly installments that are more affordable and seeing an ROI a little bit quicker. So in order to educate us more about this topic, I've got James Mabrey, who is the Senior Finance Specialist from Complete Capital Services, on the line. And we're going to discuss how Complete Capital Services helps manufacturers to write these finance plans out so you can expand your shop and not be hit so hard with that initial upfront investment. I'm going to go to a short break and then we'll get into the interview. Stay tuned. Hello and welcome to the Landtech Link podcast, linking manufacturing professionals with industry experts. I'm your host, Kevin Must from Landtech Systems, and today I am joined by James Mabrey, who is the Senior Finance Specialist from Complete Capital Services. And we're going to dive into Section 179 and how manufacturers can leverage this to expand operations, whether it be software or machines. So welcome to the Landtech Link podcast, and thanks for taking some time to speak with me today, James.
All right, thank you, Kevin. Glad to be here.
Yeah, glad you can take the time out of your day. I know you're a very busy man, so we'll try to keep this concise. And after going through some of our technical difficulties, I think we got it figured out. So apologies to our listeners if the quality is a little low this week. Had some technical difficulties that we're trying to work through, but we'll get it figured out. So before we dive in today, I just kind of want to give our listeners a background of yourself and Complete Capital Services. So, to that, if you just kind of want to jump in and kind of speak to either working or educational background for yourself, James.
Yeah, absolutely, Kevin. I've worked in the financial services industry since 2005. I've been with Complete Capital Services, or CCS for short, for about 4 years now. And my role with CCS is that I help business owners find the right financing solution for their capital equipment and or software purchases, basically.
Cool. So then, that's really, and we'll dive into this later in the episode, but I know that's really on a lot of people's minds right now with the, recent tax reform and kind of some new thresholds that have been pushed up for what you can write off in the amounts. So then a little, background of Complete Capital Services. You said you've been with them for 4 years and help manufacturers with, capital equipment and stuff like that. Do you guys work specifically with the manufacturing sector, or are you guys all across the board?
Yeah, good question. We really are all across the board. Complete Capital Services has been in business since 2001, and we're considered a full-service equipment lease and finance companies. We provide a wide range of financial products and services to meet the needs of any size business nationwide. We finance most types of essential use capital equipment, medical equipment, office technology and furniture, commercial transportation, even LED lighting. But our greatest strength is in industrial machinery and software financing. And really, we've established ourselves as a market leader in the software and technology industry. We enjoy many long-standing relationships with the industry's most successful manufacturers, distributors, resellers, and really, when it comes down to it, we're also known for our superior customer service. And really, we strive to make the financing experience personable and enjoyable for our vendors and our end users alike.
Very nice. Yeah, I know. Obviously, customer services is huge. Making sure that keep your customers happy. and really make sure that you have their best interest in mind. And speaking to this, the software side of it, I think what we've noticed, or what I've noticed speaking with people, is the unawareness that, software can be leased and actually, maybe even deducted, which we'll speak about later on in this episode. But that's something I've found very interesting that's kind of been looked over, I feel like, from some people.
I agree. Yeah, a lot of end users out there really aren't aware that software can be lease financed, and we're not aware that the actual tax deductions can be applied to it, to a purchase.
Yeah. Well, and that's the purpose of our episode today, is to kind of dive into that and, how people can leverage that moving forward, maybe expand their shops or make themselves more efficient, more competitive in the market. Any of those factors. So that kind of takes us into the meat and potatoes of today's episode. We're going to dive in, a little more of Section 179, and again, how U.S. manufacturers can use this to, lease their equipment out, whether it be software or cutting machines or any other industrial machinery, and also use it as maybe a deduction for their business. So, given kind of this whole new tax reform and everything going on regarding Section 179 and incentives, what do you feel, or what have you seen as one of the biggest advantages that manufacturers are kind of using and leveraging with the new tax code when it comes to expansion, whether it be new equipment or software or services?
Mm-hmm. Well, I guess really the biggest, most plainest advantage out there for manufacturing businesses is that the tax code has increased, or the dollar limit on this tax code has increased substantially to keep more money in the pockets of businesses starting this year. And that's a huge value to businesses that are looking to hold on to their working capital, to enhance their cash flow, to grow their businesses and keep their competitive edge in the marketplace.
Mm-hmm. Yeah, that's huge. Either that, or kind of maybe repurpose it, or maybe focus that money on acquiring new talents or training their staff. That's I know a big issue right now with the manufacturing sector, unfortunately, is the skills gap. So yeah. You'd said that the monetary limit for the deduction had increased substantially. What was it prior to this new Section 179 reform, and then what is it now?
The limit used to be at $500,000, and now it's been raised to a full $1 million. Oh. And yeah, that's really substantial.
Yeah, nice. doubling the threshold. Very nice. Now, is that go ahead.
I was going to say this. I mean, a business can really deduct the full cost of their equipment from their 2018 taxes up to $1 million, and that will help them with their bottom line, obviously. And it's a very easy tax incentive to take advantage of.
Mm-hmm. Yeah, and one thing I found interesting, just kind of through my research and studies on it, was also the push from going away from only being able to use this deduction for brand new machines to being able to purchase used machines and still be able to use this deduction, which I found very helpful and beneficial for our industry.
Oh, absolutely.
Another thing too. Go ahead.
I was going to say, you were probably leading into this, that there's a portion of this new tax law that is increased as well, which is called the bonus depreciation, which used to be at 50% up to $200 or $2 million, but now it's at 100% up to $2.5 million. So the bonus depreciation, without getting too technical, is generally taken after the Section 179 spending cap has reached up $1 million. And like you said just a moment ago, this bonus depreciation is available not just for new equipment, but both new and used equipment too. So just another huge change that is of great value to businesses out there purchasing equipment this year.
Mm-hmm. Yeah, definitely. And I can't recall, I may just be making this up, I don't know, but is this able to be retroactively applied? So say, someone bought a piece of machinery in 2016, 2017, or 2016, would they be able to retroactively apply this tax deduction or no?
Good question. This the bonus depreciation is actually retroactive through September of 2017, and as far as Section 179, the standard $1 million, that is simply for equipment that is purchased and put into use in the same year. So anything purchased after January 1st and put into use this year, that's when it applies. If you wait, you can't take advantage of it.
Mm-hmm. Yeah, it might be something else through my studies and research on a different topic. I think I'd run across that, but just want to clarify for my own purposes.
Mm-hmm.
So then, kind of speaking of, just the overall advantages of this and, how manufacturers could use this to leverage growth or cash flow. Have you seen a lot of manufacturers coming to you? And I know earlier we were speaking about how they like to wait until toward the end of the calendar year, just for cash flow purposes and all of that before purchasing large pieces of equipment. But so far, have you seen, kind of a rise in interest about this new tax reform and tax code for deductions and stuff, or even financing?
Yeah, absolutely. Usually when in years past, the Section 179 was never a permanent thing. Every year Congress would revisit the tax law and find out how much money they wanted the limit to be. So at times it was 250,000 or 100,000 or even 50,000. And for the last couple of years, right around November, December, Congress would get around to finally saying, okay, we're going to set it. It applies for this entire year at, say, 500. It's been that way for the last couple of years. Now, with 2018 rolling around, they're like, here it is at $1 million. Here are the other changes, the bonus depreciation, new and used equipment. And moving forward, it's going to be in law permanently. So when that news came out, CCS, or Complete Capital Services, we made sure as many of our vendors and end user or lessee customers knew that information right at the beginning of the year so that they could start planning for what they're going to do throughout the year. They can anticipate where their numbers are going to be with revenue and what equipment they might need for growth, and start thinking in that direction sooner rather than waiting to the end of the year. And yes, as soon as we got the word out, many people were saying thank you. Was not aware of this yet, but definitely going to take advantage of this. And we're already seeing an increase in financing requests. And whenever we give out a financing quote, we also include potential tax savings that come along with the tax code here and how it applies to their purchase.
Oh, very nice. So, yeah. I mean, as you know, that's great. They push that threshold up. As you know, dealing with the financing side, these pieces of equipment generate a pretty hefty price tag pretty quick. So that 500,000, I'm sure, would kind of get run up pretty fast. So being able to push that up to $1 million is very nice.
I agree, and we've already seen a lot more. We have a lot of repeat customers that come to us, and the dollar amounts that they're buying this year are much higher than they were in the previous years. So they really are seeing the value of the increase in this deduction limit. Well,
yeah, that's good to hear. That's I see a good indicator, hopefully, of our manufacturing economy here in the States. If more people are buying new equipment, that means, in theory, that they're manufacturing more stuff. So I think this was very much aimed toward bringing manufacturing back to the States, which is great.
Indeed.
So have you had many customers yourself that have kind of leveraged the software side of it to be able to use that as leverage to purchase maybe more robust systems that they can, manage their shop more efficiently with? Or have you noticed it more so on the equipment side?
We see it on both sides. So both new and used equipment, machinery, a lot of machinery transactions and purchases out there taking place. But the more and more we work with, again, like with companies out there, software resellers and software companies that are out there selling their products, we're making it known that this is available, that this tax incentive can be applied to a software purchase. And business owners may have not previously been aware of it, and now they're upgrading all their software, or they're getting bigger, better programs to enhance their business really, and their operations and their efficiencies. So it's working on all levels really when it comes to not just equipment or technology, but really software itself. We've seen a number already this year of very large software transactions where one of the first things the customer asked me about was Section 179 and how, and if it qualifies for this.
Very nice. Well, that's good that news is getting out there. And, obviously you've, as you said, educated your current clients and then maybe prospects about it through some marketing initiatives, whether it be email blasts or newsletters or what have you. And that's huge. You can buy these new machines, but if the software is antiquated, you can only get such efficiencies out of that machine before you've got to upgrade that software that it can really, operate it to its full potential. Well, cool. So then, from there, as you said, that you've kind of seen a pretty good split between, their software and equipment needs being met through, your financial services. Do you feel, and, I don't know if maybe some of your clients have spoken about it, but, this tax incentive that we're going to receive, or, maybe the deduction that we can write off toward the end of the year. Is there anything in particular? You said enhancing operations, but outside of that, is there anything in particular that you've heard manufacturers say, I'm going to take this from this deduction that I'm going to receive, then we can, maybe focus on staff training or raises for staff or anything in that nature?
Oh, absolutely. I've had a few business owners, manufacturers, all kinds of customers that we get are telling us that they're actually saving money because with the Section 179, they're going to be saving a lot of money. And their first thought is what are they going to spend that money on? And usually it's expansion, like it's putting a building expansion because they need a couple more new machines and they don't have any room left. Or they can hire on, especially if they're buying software, they can hire on people that know how to operate the software. So they're looking for all different ways to maximize their dollars, and this incentive is definitely helping them to free up that money so that they can do so. And of course, that coupled with a financing program is really helping growth in that direction.
Mm-hmm. And like you said earlier, the cash flow purposes, I think that's incredible, and it just makes operating a business a little less painless when okay, I've financed this out. My bill is going to be X amount every month for the next X amount of months. Now I can really see what else I can, maybe bring on as far as new employment or maybe finance new machinery or what have you.
Yeah, when the customer can clearly see, not such a big sticker shock, I guess you could say, because sometimes purchasing the equipment or the software for a certain size company just seems like too daunting, right? They're going to eat up all of their money for one thing, but what happens if they need to make payroll or something else comes up, or they need more equipment, but they're completely tapped out. They can count on the fact that with the savings alone, they're going to have a little bit more in their pocket. With the anticipated cash flow, with a financing program in place, it really makes the purchase decision that much easier for the customer. to go ahead and move forward rather than putting it off and hoping they have a surplus of capital to make the purchase. They can do it now and really help their business grow quicker rather than waiting.
Definitely. Yeah. And I mean, even looking at from an ROI standpoint, if you're just paying out monthly, it's going to be a little bit easier and maybe quicker to see the ROI than, okay, I just shelled out, X hundreds of thousands of dollars for a new machine, software package. Now it's gonna be a while until that ROI really starts hitting more of a positive number, digging yourself out of a hole.
Right. Yeah. Usually the ROI is easier to look at when the equipment or the software is generating revenue and basically paying for itself on a weekly or monthly or even an hourly basis, rather than the big cash outlay, and then you have to recoup that over time. It's a much simpler outlook. Mm-hmm.
Well, cool. That's all the questions I had for you, James. I don't know if there's anything else that you wanted to add to this or something that we didn't touch on, but the floor is yours for this end part here.
Oh, thank you. Yeah, we've touched on a lot of good points. As we've already said, it's critical for businesses, for manufacturers out there, to preserve their working capital, to enhance their cash flow, to really stay in business and succeed and grow. And so instead of foregoing a purchase, the financing aspect of things allows the business to acquire what they need: new technology, new software, new equipment for their business without depleting their cash reserves. And now with this IRS tax incentive increase, they can make these purchases and it's more affordable for them than ever. So all they have to really do at this point is choose what equipment or software they need and come to me, let Complete Capital Services design a payment that would help them make a profitable decision, and we can also help them understand their potential tax savings as well.
The Lantec Link podcast helps link manufacturing professionals with industry experts, providing news and insights regarding technology, education, and the economy of manufacturing in the U.S. This podcast will answer questions manufacturing professionals may have about Industry 4.0. If you would like to suggest a topic or be a guest on our show, please email Kevin Must at k.must@lantecsms.com.